Good morning, good afternoon, good evening, traders from across the globe. Welcome to Short-Term Trading Live with Oscar's 530th installment. We are here to teach you technical analysis and get you prepared for the next day's trading. And traders, we try to do this for you every evening for the next day. Last night we came out in front of you and we mentioned that the NASDAQ has a flat top and that flat tops produce market drops. Well, not a chance. It did not work. The market went up instead. We also mentioned that Omni yesterday actually had two trading scenarios, a sell scenario, which we'd do first, and then a buy scenario. Problem with yesterday's trading is the buy scenario never kicked in because we never went high enough to get stopped out of our original shorts. So it was a day where you lost a few bucks, but nothing really happened, which is why I chose the NASDAQ over the S&P, because I knew I had to sell into a bullish market. But traders, I am a technical analyst and a technical trader, and when a technical picture sets up, I go with it consistently every time, and you will find that consistency in your trading and consistency in your analysis will make you a much better trader. So, failure, no good. The flat top in NASDAQ did not work. However, we are now above the flat top in the NASDAQ, which gives us some room for the upside. So, yay! Get that loser out of the way. And we are above the flat top. Traders, do not lose faith in your flat tops. Flat tops do produce market drops. I probably have somewhere between 10 and 20 flat top videos I've done for you in the past. And I don't think any of them, maybe one, has turned out to be where the flat top didn't work. So now we'll make that score 2, adding yesterday's. But that's pretty good in the overall picture, right? If you lost 2 out of 10 or 12 times, well, hey, not bad. So stay consistent with your analysis. When you see those flat tops, sell them. All right. What do we got for this evening? And this evening, the video is being shot on Monday night for Tuesday's trading. That would be January 5th, 2010. Traders, again, the NASDAQ above the flat top. Thank you, NASDAQ. The ES or the S&P is above a small flag or a small little channel. I have some charts to show you. So, what do we have? NASDAQ above a flat top, bullish. S&P now above a small flag or a small parallel channel. Once again, bullish. Then we're looking at wheat. We have 2 green omnis on the board for trading on Tuesday. Traders, we're looking at the wheat market. We like the wheat market for the upside. Wheat market is looking strong. And then on the 4th thing on our board we have to discuss is the CRB index in the big bull market that it's been in. And I think that should help buoy the wheat for tomorrow. So traders, I'm going to show you the NASDAQ chart and that we are now above the flat top. I'm going to show you the ES and the small flag and or parallel channel that we just got above. I'm going to show you a wheat chart with some indicators to show you why we like buying dips in wheat. And then I'll show you the bull and the CRB, something that we've been talking about since March last year. We've shown charts in many videos. We're just going to show you what it looks like now. So with no further ado, traders, let's go to the charts. Okay, traders, the first chart you are looking at is that same nasty chart that we used to get short yesterday. Of course, it didn't work, but luckily the market didn't run away. In any event, traders, here's your flat top. The first flat top on this chart, or at least the only one that you can see, the first one that you can see on this chart, did work. The second one did work. The third one right here didn't, okay? But look at what happened. We settled now above the flat top, and I'll blow that up for you and move it over so that you can see it. But now that we've settled above the flat top, this gives us leeway for the market to move higher. So thank you, NASDAQ, for taking out the flat top. Was not a successful trade, but gives the market, as far as I'm concerned, the technical ability to start rallying from here. So go NASDAQ for getting above the flat top. Let's look at another chart here. Okay, traders, what we are looking at is the S&P daily bar chart. Each green line represents a daily bar movement or 1 day's trading. As you can see right here, as of the close on Monday afternoon, we got above this little parallel channel or bull flag, you may want to call that. We settled up here. which means now we have cleared the bull flag, giving us leeway to move higher. Same thing in that NASDAQ. We cleared above the flat top, giving us room to move higher. So the technical picture looks very nice here. Also, you may notice these red lines that go all the way back, traders. How many times did we bounce off this red line and not get above it, not get above it? Finally, we do get above it, and at the bottom of this flag is where it holds as support. Was resistance, becomes support, holds, and now we're up here. That's bullish, traders, no doubt. So glad to see that we're right back in the bull camp. I want to see these markets move higher. So you've just seen the NASDAQ and the S&P. Technical reasons why the market should move higher with Monday's up move in the indices. Indicators, technical indicators did get bullish. So you have bullish formations with bullish indicators giving us a green Omni for tomorrow. Let's look at a couple of more charts here. Okay, traders, we are now looking at the wheat market. This is the daily March wheat contract. It's a daily bar chart. As you can see, the wheat in a very smart channel, really beginning to run well with inside that channel. I like the fact that it moved higher. And traders, we are going to debut an Omni average that we have not really mentioned or debuted before in our video segments. This is a proprietary moving average that we like to use, and this is what it looks like right now in the wheat market. And traders, to be honest, I like the fact that we're above it. Look what happened here. Failed to get above. Anytime you came near it, it stayed under. But once you got above, you had a major rally, came back down and tested it and held, tested it again and held. When it did get back under it, finally, it broke down pretty hard. As of Monday's settlement, we got all the way up here. The average is down here. So I like it, traders. I like the average. I like the fact that we're above it. I like the fact that wheat is in this parallel channel, and wheat has very bullish indicators. So we are going to buy dips in wheat for Tuesday's trading. You may be looking at corn charts right now, traders, and if you are, keep in mind, corn has this big triple top that we just put in, which is why we are going to look to buy wheat today and not corn. We will probably cover corn in tomorrow night's video. We'll see how it acts on Tuesday. But watch out for the corn, because when you see a triple top in certain markets, it means a slight pullback is coming before the breakout. So stay away from corn for Tuesday. Let's go with the wheat trade. I like the wheat. I like buying dips. There is a technical reason, at least a technical picture. Now let me show you technical indicators on the March wheat bar contract. Okay, traders, you are looking at 3 of the many technical indicators that I use to analyze the wheat market. And what you can see right from the start is the CCI, or Commodity Channel Index, clearly bullish, clearly pointing towards the upside, nowhere near as high as it normally gets before it's overbought. You gotta like the CCI. Then, of course, you have the RSI, or Relative Strength Index, right here. Once again, pointing straight up and nowhere near the overbought area, so room to move on the upside. Then you have your slow stochastics, again pointing straight up, nowhere near where it would be overbought. Technical indicators looking very strong in the wheat market. I like the wheat for buying dips on Tuesday. Pull your own wheat charts, pull your indicators, and decide for yourselves if you like this trade. There will be a trade set up on our site, or I should say an Omni recommendation will be set up on our site if you'd like to know where we're going to trade wheat. The next chart I'd like to show you now, traders, is the CRB index. Traders, what you are looking at right now is a daily bar chart of the CRB index, or a basket of about 17 commodities, all rolled up into one and then shown in an average. What this is showing us is that undoubtedly the CRB is clearly in a bull market, which means it should bode well for us trying to buy wheat. You would think markets like the metals and sugar and now the grains are certainly what's pulling this market up, as well as oil. But yes, it's in a bull market. It is breaking out. It looks very strong. And that very same moving average I just debuted for you a few moments ago, this is that same average and how it's acting on the CRB chart. And it does a really good job on the CRB as well, traders. Every time we've hit that average, we have bounced and just stayed above it all the way through. I like the average. I like the rally. I think What the CRB is telling us is that we are in for a rock and roll commodity year for 2010. So let's go CRB, let's go commodities. We want volatility, baby. Volatility is where we make our money as day traders. This obviously looks like the volatility will be spent more on the upside than the down, but we are day traders, so we'll take this one day at a time. There's your technical picture, traders. Make sure you pull your own charts. Always do your own homework before considering taking anyone's trading recommendations. So, traders, you see those charts clearly? Clearly, you can see that the NASDAQ is above the flat top. You see that we are above that little flag in the ES. And if you were looking at that wheat chart, that looks very strong. And that CRB chart, wow, is that bullish. That means for now, we are buyers of pullbacks in commodities. So as the commodities have their bull run and they pull back, we find places to get long. That's our long-term view. What's nice about being day traders is we can be short today and long tomorrow, just like you've seen us do with the Emini S&P or the NASDAQ from yesterday to today. So make sure that you maintain that mentality, traders. If you know you're a day trader, don't think too far ahead. Think for the future, but always have the larger picture in mind. All right, traders, as I mentioned in every video, a stop is your best friend. Never, ever trade these commodity markets without stops. Put your stops in, put them in first, and learn how to relax a little, because once your stop's in, at least you know your loss potential and you know that the order is in. So even if you freeze and start biting your nails when the market gets down to your loss point, the stop order knocks you out anyway. Put your stop loss orders in case your analysis is wrong. All right, traders, at the site we have trades lined up for the Emini S&P and the wheat, so make sure you come on down to www.livewithoscar.com. Jump into the chat rooms and allow us to show you where and why we're buying and selling and how we've derived or come to those decisions. All right, traders, I'm getting out of here. I want to get back to my chat rooms. Give me a calling time day or night, 702-629-4755. And as always, keep your emotions out of trading. One of the best things you can do to help yourselves with that is say this to yourselves every morning, every afternoon, every evening. And you know what that is? Stops are in. Emotions are out. Futures trading is risky and can cause substantial financial loss. We do not claim or guarantee that you will profit from the information provided. That being said, I'm a 27-year seasoned trader on and off the trading floors. This is how I've made my living for many, many years.